Hi, I'm Paul BERG. I'm going to pretty much do this as a question and answer session, but we're sort of all in luck. One thing you should write down to give to your CPA if you're interested in chartering is client versus commissioner. A key ruling just came down in August from the tax court, which lays out in 28 pages, which you can look up on the internet, and believe it or not, it's almost in layman's language. Actually, it is in layman's language. The IRS fought this one person, this person won. And the court laid out every single argument. Basically, if you're going to charter a boat under the charter, well, first, let's talk about basically a boat charter. You have to spend more than 100 hours a year, and it should be documented very, very good, because the agent doesn't like you. They don't like people who rent yachts, get boats, yachts and airplanes. So they're going to look at everything with a very jaundiced eye. And what a lot of people forget in the charter business, no one can spend more time managing that boat than you do. For example, if Jack was managing your boat and he was the only one managing the boat, and you spent 110 hours and he spent 200 hours managing it, you have no deduction because someone worked on that boat more. Usually it's not a problem. What ended up happening, the way the court allowed it, this person chartered his boat through a company called Horizon, actually two boats. And they spent about 300, 400 hours on his boats. And so the IRS said, if someone spent more than 100 hours, it turns out they had a number of employees. Not any one of that employees spent more than 100 hours fixing the boat on charter. That's where the IRS was catching a lot of people. So the first thing is, you want to treat it like a business. You want to use it as little as possible, because the more you use it, the less it looks like a business. Practically, I would tell my clients, go into a LLC for two reasons. One, limit your liability. And two, it just looks more business-like. If your return is dirty, other than that, I probably wouldn't think about chartering. Because when they come in and audit you on chartering, as long as they're in the neighborhood, they're going to check everything else out. But basically, you can, if you have a real charter, you're going to be able to deduct your interest, your expenses, depreciation. But remember, if you, let's say, charter the boat for 4 or 5 years and then sell it, you're going to recapture all of that depreciation as ordinary income. The people who chartered their boats 5 and 6 years ago, and all of a sudden sold it last year, all of a sudden they're in a higher tax bracket because the Medicare tax was added onto it. The likelihood of our taxes going up or down, I'm not even going to talk about, but there is that potential. But the basic thing is you have to treat it like a business. Let me sort of run through what this person did. This person was a pilot with Southwest Airlines. He retired. He bought 2 catamarans in the Caribbean, one called Fly Away and one called Fly Me. He spent a lot of time marketing to Southwest, had all of his documents, had all of his emails, saved everything, and he spent 15 minutes here, 15 minutes there, did everything right. He self-chartered one or both of the boats a couple times, and had, I think it was a 4-bedroom boat, had approximately 8 people on it. They split the expenses. He charged a 10% override. And the court said, well, as long as he was always making money, it was legitimate. The IRS said, well, he used it. And he said, well, what he did, he became the manager of the boat for that particular period of time, and that counted in his 100 hours. basically, some of the other ways you could do it, if you were really worried, you could treat it as a second home. And there was a case a long time ago. It used to be if you bought a home and sold it, you could move your sales price into another home. That's no longer the case. But at that time, someone bought in fact, it was a client of mine, had a condo, sold it, bought a boat somewhere back in Missouri, a big boat, and lived on it. And we had an audit, and we were able to show that this was his home. So there are a number of cases where a boat can be a home. If that's the case, you get to deduct your interest and your property taxes. And if you ever do sell it, you don't have to recapture depreciation because you never depreciate it. It's something to think about. So if your return is clean, and you're going to really treat this as a business, and you're going to spend at least 100 hours. No. Let me back up a little. One of on the internet, one of the charter companies or trade groups said one way to get to 100 hours is to go to Annapolis and spend 40 or 50 hours looking at boats. That's BS. I mean, you know, the IRS agent is going to say, right. This person who chartered his boat actually spent, as it turned out, he was able to prove 347 hours. He had everything locked down. And the agents really went through it. They did things such as when he said he spent X amount of time, they made sure he was in town X amount of time. They're really going to go after you. But he treated it as a business. I do not know if he ever sold the boat because that didn't come up in his thing. Do you people have any questions?
Did he have his captain's license?
Yes, he did. No, yes, he did. He had a captain's license, but that wasn't part of that. That really didn't come up. It just came up. He did have a captain's license, but what he had done 2 or 3 times, he had chartered the boat to himself, took eight other people, and he charged a markup of 10% on all of their expenses, and he did money, had all the receipts. This guy was anal retentive. I mean, he did everything his CPA would have wanted him to do.
So where's the rule that you have to make money 3 out of 5 years?
That's a whole different thing. Then you're talking about hobby losses. You don't have to make money. You have to be able to